Hello everyone, and welcome back to the channel. Today, we're re-diving deep into a topic that gets a lot of buzz in financial circles, the Iraqi dinar, what really determines its value, and what role does international trade play in its future. Let's break it down. The Iraqi dinar or IQD is one of the most talked about currencies in the Middle East. After years of conflict and instability, Iraq's economic future is deeply tied to the value of its currency, and the key to that stability, its international trade. So, how does trade actually affect a currency's value? It's pretty straightforward. When a country exports more than it imports, it earns foreign currencies like US dollars. These reserves act like a financial shield, giving the central bank the power to support its own currency. For Iraq, this is especially important. The country relies on oil for over 90% of its export earnings. This massive inflow of dollars is what the Central Bank of Iraq uses to keep the dinar stable. But, and this is a big but, relying so heavily on one product is a double-edged sword. When global oil prices fall, so does Iraq's income, putting immense pressure on the dinar. Let's look closer at this oil dependency. Iraq exports over 3 million barrels of oil every single day, bringing in billions of dollars. This money is the lifeblood of the economy. The Central Bank of Iraq, or CBI, uses these dollars to manage the exchange rate and pay for almost everything the country imports, but this creates two major vulnerabilities. First, as we mentioned, the dinar's value is at the mercy of volatile oil prices. A price crash can have immediate and severe consequences. Second, because oil is king, other industries like agriculture and manufacturing have been left behind. This means Iraq has to import most of its consumer goods, which constantly drains its dollar reserves. This fragile balance keeps the dinar's future uncertain. So, what's the long-term solution? Diversification. To truly stabilize the dinar, Iraq has to build an economy that isn't just about oil. This means developing other export sectors. Imagine Iraq exporting agricultural products like its famous dates, or construction materials, textiles, and even tapping into its incredible history to boost tourism. By creating multiple streams of income, Iraq can cushion itself from oil market shocks and build a much more resilient economy. We've seen countries like the UAE and Saudi Arabia successfully do this, and they provide a powerful blueprint for Iraq to follow. Of course, Iraq can't do this alone. Regional and global partnerships are critical. Geographically, Iraq is in a prime spot, connecting the Middle East with Europe and Asia. It has the potential to become a major trade hub. Its key partners are already making a difference. China is not only its largest oil customer but also a huge investor in infrastructure through its Belt and Road Initiative. Turkey and Iran are major sources for consumer goods, and neighbors like Jordan and the Gulf states are crucial partners in reconstruction and energy projects. By carefully expanding these relationships, Iraq can attract more foreign currency and strengthen the dinar's foundation. This is where the Central Bank of Iraq plays a starring role. The CBI is the gatekeeper of the country's currency flows. It allocates US dollars to importers to ensure the prices of everyday goods remain stable. It manages a massive war chest of foreign currency reserves, often over $100 billion, to back the dinar's value. And crucially, it regulates international payments to prevent things like money laundering and dollar smuggling, which can fuel inflation. By skillfully managing the supply and demand for dollars, the CBI acts as the main defender of the dinar's stability. However, it's not all smooth sailing. Iraq still faces significant challenges, particularly with international banking regulations, US sanctions and restrictions on some Iraqi banks, designed to curb illicit financial activity, have sometimes made it difficult for legitimate businesses to access dollars. This can slow down trade, cause importers to turn to the unofficial parallel market where the dollar is more expensive, and ultimately weaken public trust in the official exchange rate. The CBI is working hard to reform its financial systems to meet global standards, which should hopefully ease these pressures over time. But there's good news on the horizon. We're starting to see real progress in Iraq's non-oil sectors. In agriculture, the country has revived its date and wheat exports, which creates jobs and reduces the need for food imports. Massive government infrastructure projects are attracting foreign investment in construction. And in energy, Iraq is looking beyond crude oil, aiming to export electricity and natural gas. Small factories producing cement, textiles, and building materials are also on the rise. Each of these small steps helps diversify the economy and strengthens the dinar from the inside out. Ultimately, it all comes down to the trade balance. When a country's exports are worth more than its imports, it has a positive trade balance, which is great for its currency. For Iraq, every barrel of oil or box of dates sold abroad adds to the CBI's reserves. These reserves allow the bank to defend the dinar, support importers, and build confidence among investors. But if imports grow faster than exports, the trade deficit widens, and the pressure mounts on the dinar to lose value. A balanced and smart trade policy is absolutely essential. International trade also brings another powerful benefit: foreign investment. When countries like China, Turkey, or the UAE invest in Iraqi infrastructure, energy projects, or transport networks, They bring in not just money, but also valuable technology and expertise. This boosts productivity and, just as importantly, signals to the world that Iraq's economy is a good bet for the future. This confidence makes investors more likely to keep their assets in the country, which helps stabilize the dinar in the long run. So, what's the path forward? For Iraq to achieve a truly stable dinar and a thriving economy, it needs to go all in on trade. Experts recommend diversifying exports away from oil, simplifying regulations to make it easier for private businesses to grow, and investing heavily in modernizing ports, railways, and roads. Increasing transparency in customs and strengthening cooperation with neighboring countries are also key. By taking these steps, Iraq can transform itself from an oil-dependent state into a dynamic, trade-driven economy. In conclusion, the stability of the Iraqi dinar isn't just some abstract financial concept. It is a direct reflection of the country's economic and trade policies. International trade is the engine that can bring in the foreign currency, investment, and confidence needed for a strong dinar. While the challenges are real, Iraq's potential is immense. By building a diversified, modern, and open economy, Iraq can secure a stable future for its currency and its people. Trade is truly the bridge from its oil-reliant past to a more prosperous future. Thank you so much for watching. If you found this video informative, please give it a thumbs up, and don't forget to subscribe for more deep dives into the global economy. See you in the next one.